We now turn to life insurance and qualified retirement plans, such as IRAs and 401ks. First, you should never title qualified retirement plans in your trust. Second, it isn't necessary to title life insurance in your trust either. Fortunately, these assets can pass very easily without probate. All you need to do is designate whom you want the funds paid to in the event of your death. This is usually done on a beneficiary designation form where you generally name a primary beneficiary and a secondary contingent backup beneficiary. It is highly likely that most of you have already named a beneficiary, but we advise you to double check and to also make sure your beneficiary designations are up to date and reflect your current wishes and circumstances. While many folks are content with their current beneficiary designations, we can provide some very compelling arguments as to why you should designate your trust as your beneficiary or secondary beneficiary if married. This is especially true if you have young children or potentially immature beneficiaries. Why? Because your trust allows you to control the management in terms of distributions until beneficiaries reach the age you specify, and this helps ensure the funds are used on expenditures like health, education, and living expenses instead of exotic cars. If you have minor children, the need for management of such funds is obvious, yet most of us don't like the idea of an 18-year-old being handed $500,000 of cash either. So if you don't want that to happen, or if you have young children, we strongly suggest that you designate your trust as the beneficiary or secondary beneficiary if married. Some other arguments for designating your trust as beneficiary are that it consolidates management and distribution of your estate under a common umbrella for collection, disbursement, taxes, bill paying, and other matters. Plus, your trust tends to deal more comprehensively with alternate beneficiaries in case your first choice does not survive you. These may be fine points, but they are important considerations. Ultimately, the choice is yours. If you do want to name your trust as the beneficiary, most married couples tend to leave their spouse as the primary beneficiary and name the trust as the secondary beneficiary. Otherwise, if you are single, you should name the trust as the primary beneficiary. As a final note, don't confuse retirement plans with pensions. Pensions typically cease at death. And since there is nothing to pass on, there is typically nothing to do other than to make sure your spouse receives any continuing payments to which they may be entitled. Yet some plans are part pension and part retirement plans, in which case you still need to designate a beneficiary to receive the remainder. All this information and more, including how to identify a qualified retirement plan, is set forth in the handout called The Importance of Titling Your Assets in the Name of Your Trust, which we again remind you to review.